Okay, I had two questions during the break. Interestingly enough, they were very similar questions, so I guess I didn't get my point across. The first question was, what do you mean by government-wide? And what's governmental activities? Because it says governmental activities in the journal entry, and then there's the government-wide. Well, the way the book uses this nomenclature is that government-wide statements are what? The governmental funds as well as the proprietary funds. That's what governmental-wide statements. Those are the two statements, statements of net assets or position and the statement of activity. The second question was, on the journal entry, it said governmental activities government-wide. Well, governmental activities government-wide is the full accrual basis, and the general fund is the modified accrual basis. Okay? So I hope I answered that question. But going back to our internal service fund, so what are these? I kind of kept this towards the end as to what it is. Internal service funds are basically funds activities which service other governmental units. So what could a government do? Well, it could have a motor pool, it could have an insurance fund which provides insurance to others, it could have a printing press where people send their jobs to be printed. So instead of servicing people outside the government, like a golf course, like a utility authority, an internal service fund is servicing people within the organization. So you say, why do that? Well, because whoever is doing the service wants to make sure they recover the cost of service. It's like an internal pricing system. You want to print within it, you send it to the copy shop, they'll do the printing and send you a bill. Now, it sounds simple and easy right now. So you notice that the internal service fund was kept separated from the proprietary funds, right? The other funds, enterprise funds. Why? Because the focus is different. The internal service funds are within the organization. Now, let's take this, and I want you to listen to this carefully. So you sent me an order for printing, $50,000. I send you a bill for $50,000. You are in the mayor's office on the printing press. I receive $50,000 from you. And you incur an expense of what? Expenditure of $50,000, right? So now on the internal service fund, what do I show? I show revenues of $50,000 and cost of $50,000. Because internal service funds shouldn't really charge more than what it costs them to do the job, okay? They're not there to make money, okay? Now I'm preparing my statement. So you say, if I took the internal service fund, made it a fund, and added my revenue to the rest of the revenue, what happens now? It's your double counting, because what's happening is I got money from you, right? Yet if you combine my numbers with your numbers, what's happening? It makes you double counting. So for that reason, and I know this sounds strange for the time being, but just take my word for it. When you look at those financial statements, except for the proprietary fund, where the internal service fund shows on the side, on the right-hand side, when you look at the government-wide statement, that internal service fund has been collapsed into the governmental activities. Now, what does he mean by collapsing? Well, what it means is the transaction that occurred between him and I got wiped out, which leads to the next rule in governmental accounting is if things happen between funds, for instance, I owe money to the capital project fund, the general fund, or the capital project owes money. When we do the government-wide statement, remember these are the consolidated statements, those internal receivables and payables, what happens? What do you think happens to them? They're washed. For the fund statements, it's okay because you're looking at it individually, but on a government-wide basis, you don't want your assets to be inflated or your liabilities to be inflated, because if you had a lot of inter-fund transactions, that's what it will do. So for the time being, and we'll go more into this that's the specific treatment for where it says usually reported as governmental activities in the government-wide statement because they serve departments financed by governmental funds. And we put that down because you might say internal service fund is a proprietary fund. Why didn't it show up in the business activity? Why? That's the reason why it needs to go into the governmental activity. You don't just take my word for it right now. That internal service fund, and we'll spend some time on it, is a unique creature. It's a unique creature because it services people within the organization. And for that reason, you cannot take the results of that and combine and show it as your results of operation for the entire entity. Okay? By that's the word collapsing means any interrelated activity is wiped out. Enterprise funds, these are the ones I was talking to you, electric, water utilities, airports, garages. Again, what's the intention of an enterprise fund? To fully recover its cost. And you know what? You might ask me a very difficult question. Is New Jersey Transit an enterprise fund? It's a difficult question. What is the intention? To fully recover the cost of operating the system. New Jersey Transit gets a big subsidy. Maybe not a big subsidy, but it can receive money from the state government. But the way we look at it is if it gets most of its revenue from the customers it serves, it becomes an enterprise fund. If it does get, and don't hold me to this, but if it gets less than 50% of its revenue from its customers, not an enterprise fund, it's a governmental fund. I just give you that 50%, the intention and the ability to raise that revenue. See how things can change? Okay? All right. Wait till somebody from New Jersey Transit asks why. Okay. All right, proprietary fund, we talked about this. Just you have depreciation expense, which is recorded in the fund. Expenses are recorded, capital assets. And again, why? Because in order to know what it truly costs you to service, you need to know exactly what the components are. And depreciation is a component of that. Amortization is a component. Interest expense is a component of it. And these are the statements we looked at. We didn't look at the statement of cash flow because I didn't want you to get very depressed looking at that statement yet. Okay? So, for the time being, when we get to it, we'll talk about it. And if I'm in a really good mood, I might not ask you to prepare one. Okay? Because it's funny when in my old job when that was the one thing I didn't want to deal with, because the statement of cash flow is a little bit more involved, and it's used as a direct method, much more involved than the statement of cash flow that you normally prepare. But we'll go through it. And those are the statement of cash flow is an additional statement which is not required under the government-wide model. But here it is. Agency funds. As I said, this one is very simple. There is no net position, so asset equal liability, and makes things very easy. So I never told you what an example of an agency fund is. All right. So not that this happens, but you work hypothetically, City of Newark. You collect taxes. Now in New Jersey, think of taxes as a pie with 3 slices. One slice is for the town, one slice is for the county within which you reside, so we're in Essex, and then one is for the school district, where the taxes go towards the support of the school. So in some parts of the country, instead of the town collecting the taxes, the county collects the taxes and sends it to different folks, okay? So an agency relationship is created where, for instance, a town collects taxes on behalf of others. It receives them, right? Becomes an asset, and it's due to the others. So that's a very simple example. Another very simple example is where you're getting a state or a federal pass-through grant. Money's coming in, you're only an intermediary. It comes in and goes right out from you. Okay? So, for instance, from federal and state sources. Investment trust funds. Okay. Investment trust funds, I'll give you more of a practical example. New Jersey, you're a citizen of New Jersey, and you have some money and you wanted to invest it. You're not permitted to go buy stock unless your investment policy allows you to do that. Even if you bought treasuries and agency bonds, they are limited in maturity, maybe 12 to 18 months. That's it. You can't buy long-term investments. You can't buy strips. You can't buy zero coupon bonds. None of this stuff. Okay. By the way, one of my favorite activities is investment management, and I did that quite a bit. And even though fixed income is not one of the most exciting areas, but it is a very interesting area because you need to think how the relationship between the currency, the economic indicators, the interest rate, and it's very interesting. I'm sure some of you probably end up doing something such as that. But going back to our subject, New Jersey operates something called the New Jersey Cash Management Fund, which is a mutual fund, a money market fund. That is a permitted investment for all New Jersey entities. You don't need permission from the state. You can go and buy that. They run that cash management fund for the benefit of all the participants. Where do the statements for the cash management fund, New Jersey Cash Management Fund, show up? In the investment trust fund. That's where they are within the fiduciary fund. Now think of why. Even though those monies are owed to other governments, they're not the property of state governments. They are it's due to the various units of government within New Jersey. So New Jersey, by the way, just about every state has that, has some kind of a investment trust fund that they're managing. Okay. Notice the word external participant. The word external means other than, for instance, the state of New Jersey. Could be other units of government. Okay. By the way, that New Jersey Cash Management is not open to private investors, only to state entities. Now, private purpose trust funds are like a catch-all. Okay? And actually, let me go to the next one, and then I'll come back to that. Pension and other employee benefits. New Jersey also operates multi-billion-dollar pension trust funds, public employee retirement system, police and fire. They are all these which are multi-billion dollars, and as we go through it, you'll see the numbers. It's really big numbers. Where are they shown on the New Jersey CAFR? They're shown in the legislation. Why? Because they are for the benefit of state employees, school teachers, and others. They're for their benefit. The state does not have ownership. It does have responsibility, but does not have ownership. So that's an example of pension. By the way, it's just not pension, it's also things like health benefits, disability income, and others. Oh, I forgot the other one. Okay, so when you take pension dollars, you take the investment trust funds out. This is like the private trust fund category is like a catch-all category. This is where, the government is, as it says, acting purely as a trustee. They've separated the other two because they're so big. So when you look at the financial statements for this, they are much the numbers are much smaller. Again, for private individuals. And this is where the confusion arises between a private purpose trust fund and permanent fund. Notice how close. But what's the difference? Private, and remember what the other one was? Public. Notice that? But this is where people get confused a little bit. Yes. No. What it is in this case, let's see. You have an individual who decides that there is not a government but a private museum, some other, which is not a public facility, and wants the government to hold those assets for that. And they can spend not only the principal but the interest. But it's for a private purpose itself. You see that? Remember, trustee is for a private individual or organization. It's the private, you're doing it for the private individual. And the other difference, that's why I said people get confused. The other difference is that the other one has, you have to keep the principal intact. Yeah. It's usually because they want the government to do something. Okay? So, for instance, I'll give you an example. Where I worked at one of the environment centers, somebody donated all these beautiful taxidermy birds. Must be worth like thousands of dollars. With the condition for, that they be displayed, and that if we were to sell any of that, that's how the money would be used. Yes, the donor still owns it. Yeah, exactly. Okay. Is everybody, you had a question? Yes, is expendable. In the private purpose, yes, that's the one difference. Yeah. Accounting, in this case, I think you see we talked about this, the fiduciary fund characteristics, and very much like you've got full accrual accounting, capital assets are reported, long-term liabilities are reported. Nothing really extraordinary. They're in the two fund financial statements. Notice the word statement of changes in fiduciary net position, not statement of revenues and expenses, not statement of revenue and expenditures, but what? Statement of changes. Why? Because we use what? Additions and deductions. Okay? Now we come to another field, which is these things called major funds. Okay? Now, if you recall, when we were looking at the columns, you saw this couple of columns, and then you saw, what was one of the other columns titled? Other, right? So it's like kind of lumped together, right? And so the question is, looks like you had all the major funds, and then you had one column for all the non-major funds. Now, why are we concerned with that? Because GASB requires that if you have a major fund, you must report it separately in its own column. No, you have no discretion in that matter. Well, before you know how to do that, you need to define what a major fund is. How is it classified? How do you make that decision? So what we're going to do is take a quick look at an example on page 38. And I want to just run through this example for you. And so you can see. Okay. Yes. Actually, what I should have done is I should have given you the test first, but still, we'll talk about this. Okay, so this is what you're faced with. Somebody gave you this information, and they want you to tell them which one of those three funds are major funds. The question is it road tax fund, debt service fund, or capital project? Why do they want you to tell them this? Because if they are, any one of these are, it needs its own, deserves its own separate column. Now you've got this exercise. Okay, so you see what the purpose is? The purpose is what? To determine which one of these three funds is a major fund. Boy, they look big to me, but let's see. In order to do this test, it's a twofold test. The first test is that it must exceed 10% of the total governmental fund. Any one of these items, assets, liabilities, revenues, or expenditures, the sum has to exceed 10% of this number. Okay, that's the first test. The second test is not only that, it must also exceed 5% of the total governmental and enterprise funds. Notice again, this is just what? Governmental funds. This is what? Enterprise. Got it? Got the difference? One is just governmental, and the other one is governmental plus enterprise, right? Good. Notice one thing. No, I'm not going to say this because I don't want to confuse you. Okay. Notice the word enterprise fund, not proprietary fund. Enterprise fund, because enterprise fund, does it contain internal service funds? No. That's the reason, okay? All right, let's take a look at the first one, assets. Which one of these exceeds either this number or this number? Okay, so this is more than 10% of, right? And this is more than that. Looks good to me. I only have to meet one element. I don't have to meet all four elements. Only one element, and I'm good. Got it? Pretty straightforward, right? All right, let's go look at these other guys. Liabilities. Road tax. Boy, this sounds like this exceeds this number, doesn't it? But how about this? No, not too good, right? All right, that's done. Let's go to the revenue side. All right, this one, oh, this doesn't exceed this, right? This one? How about this? Right? Okay. Let's go to, we've already done this. How about expenditure side? Smaller, right? It has to meet both tests, right? So on this, so what are the two funds that meet it? The what? Yeah. Do you understand it? Not all four, just one. Just need to meet one test. That's it. Why it's important, as I said to you, let me look at the exercise. I think I gave you a question on this. So once again, how did I do this test? This number, right? This number for capital projects met the test, right? And this number met the test, right? Got it? This one and this one, right? And so that's for that reason, debt service fund and capital project fund. Now give me one moment. I'm going to go into page 64. All right, so this is your assignment. You got these three funds. This is your assignment. This fund, and this fund. Can you handle the problem? Right? Except it's not all laid out as simply as that. what do you have to do in order to compare these numbers? You have to do what? 10% of this, 5% of this, and compare it, right? That's all that is. Right? Or the other thing you can do is, if you want to try a different approach, take this as a percentage of this. As long as it's more than 10%, you're good, right? You can take this number and divide by that, right?
So all components
So, yes, all components. You can use all components, but any one will do.
any one, you exclude the 10% of government.
And 5% of that. You're good. Yeah. Okay. All right. Is everybody okay? All right. All right, I think we talked about some of this. Determination of major fund is always a major fund. And let me see if there's anything else. Now this is what that is. That's the criteria. Okay, seems more complicated than it really is when you read it. Yeah. That's it. One element. Yeah. Meets the threshold of both. Both. See, that's right. Total assets, liabilities, revenues, or expenses. By the way, where does that number come out of? It comes out of the government-wide statement, not the fund statement, government-wide statement, okay? The numbers that were on the right-hand side that we see. Yeah. All right, now a couple of other things about capital assets. First, you already learned that we don't recognize depreciation in fund statements, right? Your depreciation. Only in the government-wide statement do we record depreciation. Any other special rules for depreciation? No, other than that, the way you would depreciate an asset in a for-profit business will be the same way you would depreciate for the government-wide statement. Okay? In the proprietary fund, you show, just as you would in a for-profit business, assets at, at their value along with depreciation, as we'll see. For the fiduciary funds, it's the same story, except in the fiduciary funds you don't find a lot of capital assets. It's mostly financial assets. Okay? And this talks about valuation capital assets. Really nothing new for you. Capital assets should be recorded at historical cost or estimated cost if actual cost is unknown. Donated assets should be estimated at fair value at time of gift. Okay? So these are the basis for recording assets. But I have to tell you one thing, and when we get to it, I'll talk to you a little bit more. What's one of the government's largest assets? No, land, you can say, what is one of the things that we never even talk about? City of Newark, all the infrastructure, roads, bridges, and you say, why do you have to account for that? Well, GASB 34 said you must think about that. And not only must you look at it, but you should, if it's needed, depreciate it. People went crazy. Are you nuts? How could we have that? How could we depreciate infrastructure assets? The GASB came back and said that what we'll do is we'll give you a break. You don't have to depreciate infrastructure assets if you maintain them at a certain service level. If you keep your bridges and your roads at a certain condition, they are infinite assets, infinite life assets. You don't have to depreciate them because they'll be there forever. as long as you maintain them at a certain level. Yeah. You know what? I'm glad you asked that question. I'm glad you asked that question because the engineer is supposed to certify that. And you know, maybe not the city of Newark and others, but you know where this comes into play is the New Jersey Turnpike Authority. Think about their roadways. The Port Authority of New York and New Jersey. It's a big number. But 90% of of folks use this method of maintaining called the modified approach. And we'll come to that. It's called a modified approach where you do not depreciate the asset, but what you do is you maintain it at a certain quality. And we all know that it's not. Yet they can do that. All right? So there was one piece that wasn't here. I wanted to tell you about that. Long-term liabilities should be okay. Let's see if there's anything new here. Should be reported in the government-wide statement. Proprietary funds carry their own long-term liabilities. Again, fiduciary funds carry their own long-term liabilities. This is one thing by now you should have down. You know, make sure you understand this, which is the. Now, somebody asked me about modified accrual, which is keep on talking about modified accrual. In the next chapter, we look at how modified accrual is applied in practice. Remember I gave you the example of taxes. If you receive them within 60 days after the end of the year, you can accrue them. Another example, I'm trying to think of examples that sound really crazy. You borrow money. You CFO or smart cookie. That you know that payment coming due on December 31st? Could we make that payment come due on January 2nd? Now, if you were in a for-profit, full accrual basis, what would you do? You would what? Accrue the interest, right? Through that period, whatever that is, except for those 2 days. But in government, you have the option. I said the option, not to accrue the interest. And recognize it when it's paid. So that's an example of how things are. That, you know, what can happen. And when we come to the debt service fund, you'll see how that works. But this is one diagram. You should try to keep that in mind. And I think we talked about these statements and the basis for them. We talked about this, you know, government-wide financial statements and fund statements. Again, I'm repeating myself over and over again as to a different basis. But you have to get this into your mind. Okay, let's take a look at a couple of questions. I'll try to go to, for those of you who don't have the book, let's take a look at question 2.9, which is on page 'm sorry, what was the question? Is it, would I take? I just lost it. Hold on one second. Question 2.9, journal entries. Okay. Yes, question 2.9, not problem 2.9. Question 2.9. I should have put down there. Now, just take a look at that question 2.9, and that's on page 57. No sweat, right? You can do this, right? All right. So they borrowed some money, usually, and purchased a building. What do you have? So the first one is cash debit, right? What's the credit to? Now, give me give me the general fund journal entries first. Okay, good. Other financing sources. Okay, that's a credit, right? 1 million. What's on the governmental activity side? Cash, debit, and credit notes payable. Just like the one we did before. Okay? Governmental activity. Just opposed to general. And then the second transaction, apparently, purchasing the building would be what? You know you have to credit cash, but what would you do? Debit, expenditure, whatever, building, capital outlay, whatever you want to call it. And if it were a real business, what would you do? Credit cash and debit an asset, which is what? The building. Yeah. All right. You wish all the questions were as easy, right? They will be. We'll get. Okay. Problem 2, 3. All right, this one's kind of fun thing to do. This is on page 62. I'll go back again. Okay. This is the question, very easy, true and false, but something to think about. All right. David, first question. A general purpose government typically engages in governmental business type and fiduciary activity. Everybody agree the first one is true? Okay. Second, governmental fund types include the general fund, special revenue fund, debt service fund, capital projects fund, and internal service fund. What do you think, guys, in the back?
Of course.
Okay. Internal service fund. Okay. Number 3, statement of revenue, expenditures, and changes in fund balance report the inflows and outflows of current financial resources of governmental funds. The word is expenditure. Is it true or false? No. It's true. Yeah, it's true. Oh yeah, the first one is true, second one is false, third is true. And 4, financial information for trust and agency funds is reported on both the government-wide and fiduciary fund financial statements. Wow. Why is it false? Agencies, well, you don't show them in government-wide statements, right? Okay. Number 5, revenues derived from specific programs or functions are provided for those programs or functions by outside grantors or should be reported in the government-wide statement of activities as program revenue. Actually, you know what, and I should have shown you that on top. That was one thing we missed. They are program revenues. It's true. Yeah. You know why? You have program expenses and you put right next to it program revenue. They're not general revenues. Remember at the category I showed you the general revenues? But on the right where on the top you saw the heading which said program revenues? Yeah. If you remember that, that's what that is. Okay. Number 6, all proprietary fund financial information should be reported in the business type activities column of the government-wide financial statement. Tricky question. Okay, how many say true and how many say false? Don't be shy. False? Who says true? And everybody's not sure. Okay. Tell me, first of all, why did you say false? Okay, now, you know what? And this is where I said you got to think, because proprietary funds contain what? Enterprise funds and internal service funds. And remember what I said to you about internal service funds? Okay, that the question says all proprietary should be reported in the business type activity. Where I said in the business type activities you don't show internal service, you only show enterprise funds. Yeah. That's why it's false. A fund is both a fiscal and accounting entity. Well, it's true. The police department purchased 3 new police vehicles. Annual depreciation on the new vehicles will be reported in the general fund financial statement. Okay, now if you don't get this, I'll be very upset. What's the answer? Better be false. Remember I told you assets, police vehicles, assets, and what are these? General fund financial statements. Remember I said that to you? Can't show these long-lived assets there. The statement of changes in fiduciary net position reports additions to and deductions from the net position rather than revenue and expense. Well, sounds good to me, true. In the governmental fund financial statements, the only individual funds for which financial information is reported in separate columns are major funds. It's true. Yeah. 8, police department. Police department is a part of the general fund, right? It says that. They purchased 3 new cars. Then it says annual depreciation on the new vehicles will be reported in general fund financial statements. We don't recognize depreciation in general fund financial statements. You only recognize it in the government-wide statement. Yeah. All right, what's the next question? Let's see. The next question that we were going to discuss was, oh, this is too easy, 2-4. Okay. Which means that you should get every one of them right. Okay. Which one's the first one? Fiduciary fund. Everyone agree? What's the next one? Permanent fund is what? A governmental fund. Which one is the next one? Debt service fund. Government. Permanent fund is a governmental. What this question is asking you is, tell us whether it's a governmental fund, a proprietary fund, or a fiduciary fund. Got it? Agency is what? Fiduciary. FF. Permanent fund is what? Government. Debt service is what? Government. Internal service fund. Proprietary. Pension. Fiduciary. Special revenue fund. Government fund. Enterprise fund. General fund. Yeah. Investment trust fund. Capital projects. And private purpose trust fund. Everybody got it? See, it would be too. I thought about this. I said I was going to put the answers up. I said, no, I won't do that. It would be too easy. You got to think about this. Yeah. No, private purpose trust fund. We just talked about it. That's part of the fiduciary fund, right? Yeah. All right, continuing on. We got two more quick questions. Actually, one question. Matching funds and identifying characteristics with fund and government-wide reporting. Okay. Here, this is the question, 2-5. Take a look at it just quickly and then we'll go through it, okay? Okay. You have it solved already, right? Okay, so let's start off with the first one, governmental fund. Which letters would you pick? Modified, yep. B, what else would you pick? Fiscal accountability, good. That's E. F, debt service fund, yes. And they also use budgetary accounts, which is I. Okay, I. So it's B, E, F, I. How about proprietary fund? No, not proprietary fund. Operational accountability, A. We just saw the statement of cash flow, didn't we? Proprietary Fund D. Okay, now next you go. Which one? Yes, H, good. What else? Two. What else? You said H, what else? What did you say? J, and you're missing one more. You said A, D, H, and J. You need one more. G, because it has both current and non-current assets. So it's A, D, G, H, J. Fiduciary funds. All right, take a look at that. See, I like that. Yeah. Which one? A, yes, I like that one too. K, I like that too, yeah. K is additions and deductions. One more. Fiduciary funds are very much like proprietary funds, right, in the way they display the balance sheet, you know. So same thing, G in that case too, current and non-current assets and liabilities. No, because remember fiduciary funds had what? Additions and deductions. Yeah, additions and deductions. Yeah. Number 4, governmental activities. All right. A, I like that, A. What else? No, not B. G, yes, both current and non-current assets and liabilities. Remember, operational accountability goes with accrual basis, not with modified. What else? Not I either. J, somebody said J. Revenues and expenses, because it's government-wide. Yep, and I need one more. H, did somebody say H? Well, that's a good one. Remind me to give you extra credit for that one, because that's a tough one. Because internal service fund and governmental activities, we just talked about that. Okay, next one, last one. Bear with me, we got 2 more minutes, couple of more minutes. Business type activities. Guess what? Don't even have to think about it. What was the one we just did? Governmental activity, government-wide, right? Aren't those accrual type of, isn't it like commercial accrual type of, it's the same exact thing for the business type activity. Same, AGHJ. Yeah, it's AGHJ.